What's up, guys? Today we're going to take a look at how to find a position, how to create a position in the market by using price action. We have imbalances here, which we do not know if the imbalance is going to hold or not. We do not have enough confirmation that we're going to take out the liquidity here created on the top. So it tells us that the price action we are creating here is maybe interesting to look into to target these highs if they give us the chance to go in. If not, we need to wait for confirmation. Let's see what happens. So now we tried after this. I think this was a market. Yeah, this was market open. So the market crashed, just took out these lows, took that last imbalance, order block, reacted there, and then tried to break the highs, which it did, but this is not a clear enough sign for you to put money into the market. So now we have here a clear indication of new consecutive higher highs and higher lows. So it means that the market is trying to change structure, okay, from, let's say, lower highs and lower lows to higher lows and higher highs. And in this case, you can see here that now we broke structure to the upside. We have volume increase since market open. So what was that time? It was, 6 o'clock where there was the break. What do we need? I said we need liquidity. Liquidity is laying here on the top. We have some fair value gaps here to close in case we want to go down even further. And this basically would have just been a liquidity grab to go even lower. But due to overall bullish market structure and macro trend is bullish, we are looking for bullish reversals and entries. So in this case, we have our liquidity targeted here at the top. I will do it in black. So this is our target. This is what we are targeting. And now we have a break of structure. So the most important thing now is where can I enter this trade? And you always need an imbalance, a fair value gap. And in this case, we have printed here a fair value gap. Why? Because a minority of players just push the price higher with their orders without the price really being traded by, let's say, sellers. So sellers didn't rebalance this price. Then we created another imbalance right now. So I am speculating that we will not retest just the high, but we will try to close that imbalance, and we have an order block, supply laying down here. So this would be our interest zone to go long. In that case, let's say the most easy way to do it is just put it at the 50% level. Put your stops, let's say, under the liquidity here, and put a target 1 to 2. So let's see what happens if we let it play out. So now it's too fast, the chart. So now we got triggered exactly at our fair value rebalancing price. So I usually tend to take the close of that imbalance because it always gives you a better entry. But let's say we still took this one, because if you put it down here, there is a risk. Imagine this candle would not have happened to take out that liquidity here, or to create even more liquidity. We would not have been triggered into our entry. So let's see what the position is doing. So in this case, we know we're targeting the highs here. So in this case, we would have had a trade of 3.52 risk to reward. Now, we broke the high again, which is for me time to go break even. So there, you roll your stops to 0 and let the trade basically run for free. Then I like to take profits some kind, or take some kind of money out 2/3 of the way up. So here I'm gonna chunk off 1/3 of the position that is still running, and I let run 2/3 until target. So in this case, yeah, boom, targeted. So this was now a 5-minute example. So let's say you want to trade this continuation, okay? So now it's the same thing basically. So what do we have now? Let's say we go into the 15-minute chart. So we have our position, we hit target, we broke structure, major structure to the downside. So now most likely it will try to go to that imbalance and most likely will react. Yes. So what is now our next entry possibility? So we have one big fair value gap here, and we have a retest of highs. So in this case, I will not use the 50% level, but I will use this time the retest or the close of that imbalance. The close would even be here, but let's take this high. So my entry, I will place the entry here with the stops under this liquidity. So if we take that liquidity, we could go even lower, maybe take that imbalance before we go higher. So we protect ourselves but want to maximize gains. In this case, we have again a 1 to 3 setup. And then you wait for the price to come basically down. You don't chase the market, you let the market chase your entries. And this is the big difference. What people often don't do, or they try to get into a move without really waiting for confirmation. So now we almost hit our entry. Boom. So now we entered the trade. Boom. Almost 50% already done. So in this case, here we are already break even on the position. So now we have a second TP, where we take, let's say, 1/3 again out of the position. So now, boom, we hit the TP2. So TP2 now allows us again to take out some liquidity, and as you saw, boom, we hit targets, easy money. 2 consecutive setups in the same price action movement, same pair, you know. So this is how you can trade trends. You need to wait for confirmation. You need, in this case, we had this small break of structure, but it was something in a smaller time frame. So this was more a scalp trade or intraday trade. So now this was a even better setup. But just to show you that in smaller time frames, there are the same opportunity happen in every time frame. You could do this in the 1 minute time frame. You can do this in the 4-hour time frame.